Welcome to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're going to be talking about Form 990, specifically Schedules A and B, our public support test, and our donor transparency. They really work together and need to be reviewed together. When looking at these two schedules, Schedule A and Schedule B on the Form 990, we're facing as organizations all kinds of challenges. We're looking at donor concentration and how that affects our public charity test. We're looking at the wider use of donor advised funds, again, feeding into that donor concentration, and stricter regulatory oversight. But our goal today is to help you understand what the schedules reveal. Schedules A and Schedule B answer two questions fundamentally. Schedule A is, does our organization qualify as a public charity? And if yes, are we maintaining that? Schedule B shows where our significant funding is coming from and is it properly disclosed. Now, I do want to say one caveat about Schedule B. It is not part of our public disclosure document, and I will repeat that when we talk about the details of Schedule B, but I just want everyone to understand that Schedule B is not required to be sent under the public disclosure requirements. It does go to the IRS. So in today's environment, we are facing fewer overall donors, larger gifts from fewer sources, and an increased reliance on gifts from foundations, donor advised funds, and government grants. So a key takeaway is that as funding becomes concentrated, Schedule A and Schedule B receive additional scrutiny from our regulators, our funders, and watchdog organizations. Now, specifically Schedule A, this is our public charity status information. It shows why the organization is classified as a public charity. Are we a publicly supported organization? Are we an organization supported by program revenue and contributions, or are we a supporting organization for other not-for-profits? And it discloses our public charity support test, which is a 5-year rolling calculation, and it shows whether we meet the requirements. And basically, those are the 33 1/3 test. Our public support needs to be more than 33 1/3 of our total revenue. And if not, there is a 10% facts and circumstances test that we can use in those situations when we fall below the 33 1/3. I really want to talk about executive oversight because our public charity status is not permanent. Changes in funding patterns have just as much effect, if not more, on our public charity status than non-compliance issues. Many organizations get moved from public charity status to private foundation status because of the concentration issues that we've been talking about. So we really want to dive into this public support test and explain what's really being measured here. Again, we're looking over 5 years, so that smooths out some of those fluctuations, but we're looking, what is the source of our revenue? Is it coming from public places, public contributors such as private individuals and businesses? Other public charities is another public source. Government grants, program service revenue for 509(a)(2) organizations. And then we look at that in comparison to our total revenue to see where we are with this percentage. Now, as we're doing this, we have certain limitations in what we can include in public support. We're looking for any person or organization who have influence based on the size of their gifts on the governance of the organization. So contributions from one donor, generally if they exceed, depending on the test, we're talking about 1 or 2% of gross revenue. And their contributions include their business relationships, and their family relationships. If a married couple, both people are contributing, children, parents, if they're contributing, businesses owned by the donor, or business partners of the donor. It all has to be consolidated together. So we're really looking for these, what we call disqualified persons, and removing them from the public support part of the public charities test. And so this is where a lot of the issues come in when we're looking at this for that test. So, as you can imagine, an over reliance on a small number of donors is going to be classifying some of those donors or more of those donors as disqualified persons and removing them from the public support portion of the test. So, even a well-intentioned major donor could erode our public support percentages. This is why in the first 5 years, we calculate it, but it's not reported on the 990 because the organizations are trying to get into that area where we're getting a bigger donor base. But as trends are going now, we really need to be looking at this concentration. So let's talk about Schedule B for a minute. Schedule B is the schedule of contributors. And again, this is not part of your public disclosure requirements. So wherever you set up your public disclosure documents, do not include Schedule B in there. Your 990, your IRS exemption application, those are part of your public disclosure documents. Schedule B is excluded. Now, Schedule B will list the contributors that have contributed during the year over a certain dollar amount. And that generally is $5,000. So if you have someone who's contributed either cash or non-cash of $5,000 or more aggregated through the whole year, then we are going to be adding those to our Schedule B. It also includes their names and addresses. So when we've got those anonymous donors, people who want to remain anonymous, there's reporting requirements here that we have to put their names on there. But again, this is not part of the public disclosure requirement. It's not going to get out to the public, but it is going to be reviewed by the IRS. The other thing that is on Schedule B is the contribution amounts and whether those contributions were cash or non-cash. And if they're non-cash, you have to provide a description. Now, IRS is going to review this, but also I want to let you know, it's my understanding that many state regulators are getting access to Schedule B so that they can be cross-checking their requirements with state charitable registration. If you have a donor in their state and you're not registered in their state, that could be an issue for you, and the state could require enforcement. So you want to make sure that you're cross-checking before that those major donors, you're registered in those states that require charitable solicitation registration. So the pitfalls, of course, are the concentration of donors, aggregating donors, and the effect that it has on our public charity status. Also, and as part of that, our donor advised funds, because our donor advised funds, we're typically reporting those on Schedule B as the donor advised fund, the contribution coming from the donor advised fund, not the individual behind the contribution or who is advising it. So you may have a very large donation, say, for example, from Fidelity donor advised funds. It gets aggregated on Schedule B. So you're going to want to look at those donor advised funds. The majority of them are public charities and can be included in our public support. But how we report that on Schedule B is we consolidate all those groups together. So we want to make sure that we are properly classifying and grouping these contributions, and we're doing it consistently across both forms. So our common pitfalls for Schedule B, again, failing to aggregate donors, overlooking corporate and foundation relationships, again, aggregating those donors, and misrepresenting non-cash contributions. They have to be reported on there. And finally, not putting who the donors are on our Schedule B. Those people who want to remain anonymous, They need to remain anonymous, but we have a filing requirement with Schedule B. So those have to go on there. So that's the summary of both schedules separately, but when we're looking at them together, we want to make sure that we have this consistency across both, that major donors on Schedule B may affect our calculations on Schedule A, and we want to make sure that everything is classified properly so it's not skewing our public support percentage. We want to make sure that our government and our foundation support is also classified correctly. When we have these documents and we're giving those to the regulators, they are looking at sudden changes in our percentages, a heavy reliance on just a few contributors, that Schedule B donors don't align with what we've reported on Schedule A, and that we are consistent from year to year. Now, depending upon who's looking at this, if it's the IRS, they have access to Schedule B, and there's a lot more scrutiny that can go on there. If it's a watchdog organization, they do not have access to Schedule B, but they're still looking at those documents in our public support test. So what are the things that we need to be looking out for? What is some of the common risks of creating an error on a 990 unintentionally? And that would be miscalculating our public support, underestimating donor concentrations, and misidentifying the donor advised funds as individual contributions and not from the donor advised fund itself. And of course, inconsistent reporting across the schedules. We want to make sure that's handled properly. So out of those pitfalls, we've created some best practices, and they are, we want to be monitoring your public support trends throughout the year. How was the donations between public and non-public sources? How is that affecting your public support charity test? And maybe that's one of your key performance indicators that you're putting on your dashboard and sharing those fluctuations with the board of directors and how different large donations, while welcome, could affect that public support test. Discuss the donor concentration at the leadership board level. And then make sure you're coordinating between your development team, your finance team, and your advisor who's preparing your 990. Make sure that we're all coordinated so that those classifications are happening in the same way in all three places. Again, review your Schedule A and your Schedule B together before filing the document, making sure that there's no inconsistencies across the two forms. And when necessary, engage an experienced nonprofit advisor to help you monitor those patterns and answer some more complex questions for you. So to wrap up, Schedule A and Schedule B can directly affect your public charity classification. They're really important documents. They affect your fundraising credibility because those watchdog organizations are looking at that public charities test. And the regulators are looking at consistency between Schedule B and Schedule A, and they're looking at who's donating to your organization and are you registered in that state for charitable solicitation registration? Is what you're reporting on your Schedule B matching the donor's charitable contributions? Those kinds of things are being looked at. So these are not just compliance documents. They can be strategic risk indicators. So we want to be monitoring these again on a regular basis, not just at the end of the year. But as a leader, you don't need to manage that calculation all the time. You do need to be aware of how funding sources are tracked and that we're tracking them consistently. That donor concentration could affect your public charity status. You need to understand how much you have within that calculation to still qualify for the public charities test, and that your disclosures are complete and consistent across the entire form. So I recommend that the next thing you do is review any recent changes in your funding mix by identifying any donor concentrations. The sooner that you can identify them, the sooner you can take action to offset those risks. You want to validate your Schedule A calculations and confirm your Schedule B accuracy and aggregation before filing the return. And then again, consult an experienced non-for-profit advisor if your donor patterns have changed. I know that was a lot, and hopefully I've answered all of your questions, but if you have any on this or other topics, please put them in the comment section below, and we'll get back to you as quickly as we can. I hope this was helpful for you, and I want to thank you for joining me. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, I'd love to help you cut through the noise.